like I said, I said earlier, I've got boats. They go down in value. I've got cars. They go down in value. And that's in and of itself not evil. But when it is a large percentage of your income or your net worth that's going down in value, then of course you're going to be broke your whole life. So if your entire investment strategy is $30,000 cars instead of putting $30,000 in a 401k, you're going the wrong way. Or instead of saving up the money and getting a house, you're going the wrong way. House is going up in value. 401k is going up in value. Makes you a millionaire, like we said earlier. But no one buys cars to become a millionaire.
And this applies to houses as well. It could be an appreciating asset depending on your house, how long you plan to hold it. But once again, those terms and those interest rates are very crucial. Just 1 or 2% can cost you hundreds of thousands of dollars over the life of that loan. That's why it's very important to get the best rate. So whether you need to shop around, go to a credit union, shop at different banks, make sure your credit score is top notch so you can get the best rates. Those things are going to matter more than the actual cost of the house. Many of us can afford a certain payment, but it's about the house itself and is it sustainable? Is this the amount that you truly want to drain your wealth for? Because in a house, your assets are inside the house. We call it equity. That means that your cash is still inside the house and you can't retrieve it unless you get a home equity line and borrow off of that house and use it as collateral. Or you finally sell the house and you downsize to maybe a smaller house and then you could take the cash out. So this is a long-term investment, which is a house. Now, a car, you can't do that. Maybe you get something that's pristine, maybe something that's a classic. But once again, you're going to have to invest, keep it up, maintenance, gas, all those things add up. And you have to keep it for 10, 20, 30 years. And you may not see the benefit of that until that time. And creating a financial plan just brings awareness. As he said before, when you create a budget, it brings awareness to those money drainers. It's like, what could you do with an extra $20,000 or an extra $40,000 over 10 years? That's an extra $500,000 that your family can have. Now, does that mean don't buy a car, as I said before? No, maybe you buy a car and a portion of that wealth goes into that vehicle to get you to point A to point B. But it's about utility over conspicuous consumption. It's about the ability to use that vehicle to get you further in life and to make your life easier. But once again, we are paying for the things that we're not really even using, or we're not making any profit off of those status symbols. Brothers and sisters, I hope that you learned something today, that wealth is not necessarily just about how much you can get in the stock market, because what you can get in the stock market is marginal, maybe 7-8% on money based on the S&P 500 over years and years and decades and decades and decades. Or you can start plugging in some of those holes, some of those money drainers, like the vacations, like the entertainment, like the food, and make sure that you're creating wealth yourself and take control. So you don't have to worry about inflation as much. You don't have to worry about how much you're making in your investment account, because the money that you're handling inside your home is being protected. Dave Ramsey actually has a great quote, which I love. I say it all the time. What happens in your house is more important than what happens in the White House. What that means is how you manage your money inside your house, what you spend your money on, has a bigger impact on your wealth than any policy that the federal government can impose. And speaking of, there are also benefits that the government offers that we are unaware of, but we just don't know what we don't know. So if you are struggling, if you're trying to figure out, hey, I'm making 6 figures, I have $1 million in my IRA or 401k, but I don't think that I can live another 10, 20 years on this money if I retire today. Earlier, we did a video on a lady who's 107 years old. When she retired around 60, do you think that she thought she was going to live another 40 years? Probably not. And is she living the quality retirement that she wants? People are stressed out. Health costs are going up. Their body is deteriorating, and they want to make sure they have enough money and will not run out. If this is you, you need to make sure you schedule a consultation to get a financial plan, speak with a financial advisor, and see if we can help you out of this situation. Because no matter where you are, there is a way to get you where you want to be, but we have to set proper expectations and we have to be honest with ourselves. For me, my name is AB Ridgeway. This has been another Ridgeway Report. And if you love videos like this, make sure that you subscribe, because it helps me. It helps the algorithm push videos like this out to you so you can get the financial information that you need to make better financial decisions. I'll see you in the next video.